As anticipation of a Bank of England interest rate decrease wanes, some of the largest banks in the UK are increasing mortgage rate. Starting on Tuesday, there will be some cost increases on fixed-rate mortgage packages from Barclays, HSBC, and NatWest. Over the past few weeks, mortgage rates have increased in response to shifting opinions of when the bank could lower borrowing costs. It is no longer anticipated that the bank will lower its benchmark rate as frequently or as soon as previously believed. In response to Barclays' statement, which is raising rates for the second time in 7 days, a number of its mortgage products will see increases of 0.1%. NatWest announced a 0.1% increase to certain of its 2- and 5-year switcher offers for current clients. On Tuesday, HSBC announced that it was raising certain of its rates, but it did not specify how much. Fees for building societies are also increasing. Leeds Building Society announced that it would raise the fixed rate for both new and existing customers on a few products by up to 0.2%. The co-op announced that starting on Monday, it would increase the rates on certain of its fixed packages by up to 0.41% while decreasing the rates on other offers by 0.07%. The average rate for a 2-year fixed mortgage is 5.82%, while the average rate for a 5-year fixed mortgage is 5.40%, according to financial research provider MoneyFacts. Broker Justin Moy of EHF Mortgages said homeowners with larger loans minus £300,000 or more might notice a difference, but claimed a 0.1% increase would not have much of an effect on those with smaller mortgages. With Barclays, they've received 2 nibbles, 0.1% tomorrow, Tuesday, and 0.2% last Thursday, for a total of 0.3%. That's an increase of £4,500 over 5 years for someone borrowing £300,000, he told the BBC. According to Mr. Moy, the increases would give brokers and borrowers loads of aggravation. It starts a panic off because customers see rates going up, he stated. Bank forecasts. Rates are rising as a result of lenders reacting to shifting forecasts regarding the path of the Bank of England's benchmark rate, which sets borrowing costs and is now 5.25%. Many observers had predicted that the bank will start lowering the rate in June due to the recent decline in the inflation rate. Recent inflation data, which tracks the rate of price increases, indicates that inflation is not decreasing as quickly as anticipated. Prices increased by 3.2% in the year to March, according to the most recent inflation data, which was less than the 3.4% increase in the previous month but still somewhat higher than anticipated. Markets have also been impacted by U.S. events. Additionally, U.S. inflation has not decreased as swiftly as anticipated, delaying expectations for when rate cuts by the Federal Reserve, the country's central bank, will occur. Global markets have been impacted by the potential postponement of U.S. interest rate reductions, which is an additional factor contributing to rising mortgage rates. When speaking to reporters at the International Monetary Fund spring meeting last week, Chancellor Jeremy Hunt stated that what happens in the US has a knock-on impact in the UK.